it could well be that we're running a bigger deficit than we thought, and that brings the the crisis in the silver market, where one of the big exchanges defaults and just pays cash instead of silver, and everybody realizes it's all gone, and the price goes straight up. That was kind of out there somewhere in the indefinite future. So now maybe it's in the intermediate term future now, where we actually can put a time frame on it.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 8th through April 15th, 2024, while supplies last. First, we feature 1 ounce 2024 American Silver Eagles at just $5.50 over spot. It's a limited supply, so there's a maximum of 1,500 ounces per order. Next, 1/10 ounce 2024 American Gold Eagles at just $51 over melt. It's also a limited supply, so a maximum of 150 per order. And finally, 90% constitutional silver pre-1965 mixed dimes and quarters at just $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend John Rubino from rubino.substack.com. John, thank you so much for joining us today.
Hey Elijah, thanks for having me back.
Well, it's great to have you today as we record this on Friday, April 12th at 2 p.m. Eastern. We've had quite a crazy day in the markets. We saw gold pop above $2,400 and silver above $29. And now we're seeing a sharp reversal. It seems like volatility is definitely here in the metals markets. We're also seeing the stock market sell off here. What do you make of what's happening over the last couple of weeks in the metals markets, and then specifically today as we're seeing this sharp reversal?
Well, today, that was an exciting morning, wasn't it? We woke up to being a lot richer than we thought we were. But the fact that it reversed out is not surprising at all, because there's resistance at these big numbers, 2,400 for gold. At that point, lots of people have embedded profits, and people like big round numbers as far as setting their sell orders and buy orders and things like that. So no surprise, a lot of selling came in at 2,400. Same thing with silver at 30. That's a big resistance number there, and silver was getting perilously close to that. So I think a lot of selling came in preemptively, and that knocked precious metals back down. Now, the other reasons maybe are bigger in the scheme of things for precious metals reversing out, and that is that the stock market is tanking today. And I think that's for two reasons. One is that inflation is not going away. And people were kind of reassured by the producer price index number that came out a couple of days ago. Then they looked a little closer, and they saw that it was just the government manipulating stats again to make the election go more easily and everything. And it was what they did with the PPI was they seasonally adjusted gasoline prices way doan. Or much lower, they gave gas a much smaller increase than it probably should have had, in an environment where oil prices have gone from $60-something a barrel to almost $90 a barrel just lately. That means higher gas prices. And for the government to say gas is being really well behaved is a scam, and people figured that out. And they concluded that higher inflation means higher interest rates and less chance of a cut from the Fed, and that's bad for equities, and they sold off equities. So you got the stock market tanking today and pulling everything else down. So even without gold and silver getting near resistance levels, you probably would have had them go down today just because the overall stock market is tanking. And when stocks tank across the board, they kind of throw the baby out with the bathwater. Everything falls. And we've seen that a couple of times in the last decade with precious metals, where equities bear markets included precious metals bear markets for no apparent reason other than they were just part of the global financial system. So I think the thing to look out for is what happens with equities going forward. Precious metals are in great shape, both technically and fundamentally, but they've got this equities bear market looming over them. Oh, and the other thing, of course, is that the Middle East war is broadening dramatically. And as we're speaking right now, the U.S. and Israel are awaiting Iran's response to a recent Israeli attack, and they don't know where it's going to be. They don't know who's going to get hit, whether it's just an Israeli target or a U.S. target as well, and what the U.S. is going to do. This is geopolitically terrifying. And that alone would be good for an equities bear market. So you got a lot of reasons to sell stocks right now, and all of them potentially impact gold and silver.
Now, if we want to kind of hone in on a couple of those there, you mentioned the geopolitical risks. When it comes to, obviously, the stock market selling off today, and if we continue to see a bear market, do you anticipate these geopolitical risks to have a positive or negative impact on the precious metal markets?
That's the tricky thing, isn't it? Because gold and to an extent silver are safe haven assets. So when the world goes crazy, you tend to see people buying gold and silver. At the same time, we just don't know what's going to happen in the Middle East. If if Iran's attack threatens the U.S. in any way or hurts Israel in any meaningful way, and then they respond by taking out, say, an oil refiner in Iran, and that causes the oil market to spike, and maybe oil goes to $150 a barrel, and that's horrible for stocks. And if stocks tank, that might bring down precious metals, even in an environment where money is flowing into safe haven assets. So you just don't know. I think this is why you dollar cost average in precious metals or anything else you want to get into. Just don't jump in with both feet, because there's usually cross currents. There are usually good things and bad things that could happen. But if you're just programmed in to buy the same dollar amount each month, these kinds of things we're talking about are not nearly as important, because if something happens that knocks the price down of the thing you're buying, then you get more for that same number of dollars. And you can take some solace in that, and your average price improves. And so it's not that bad. And I think now more than ever, we should be programmatically trading. In other words, don't let your emotions dictate what you spend money on right now, but set up a plan and just stick to that plan, and then let the world unfold the way it's going to unfold, because it's absolutely unpredictable right now. And geopolitically, we haven't even mentioned Ukraine, where France is apparently supposedly sending soldiers to be on the ground in Ukraine, which means Russia will end up killing NATO soldiers, and then who knows what that means. And so there's a lot of things to worry about out there. And you cannot trade a market like this, because so many different things point in so many different directions. So just dollar cost average, just buy a little bit each month, and then view what's going on in the world with interest. But you won't be as financially threatened by it as you would be if you jumped in with both feet on one or another thesis here.
Now, you recently wrote an article about the possibility of another silver squeeze coming in the future, and all the demand for silver, especially in the solar market. When it comes to where we are in the precious metal bull market right now, some people are saying, things are getting overpriced, but in your view, it seems like there's a lot of room to run for both gold and silver. Can we focus a little bit on the silver supply right now and why it is so bullish for silver?
Yeah, well, several things are happening in the silver market. One is that silver is now a market that is in deficit. In other words, the world's silver mines aren't producing enough silver to satisfy the current demand of fabricators, people who use silver industrially, and investors, people who buy silver coins and bars. So what we're doing now is we're using up the available stocks of silver out there. And that's just generally, conceptually, that's a bullish thing. That means prices will go up over time to bring things back into balance. But there are reasons to think that the consequence of the silver deficit is going to be felt sooner and in a bigger way maybe than you might expect. And one is that I think it was Bix Weir who looked into the numbers on how much silver is being used by the solar panel industry, and he found that it's much more than the silver experts out there thought. up to this point. So that the deficit is actually bigger than we were thinking. And then at the same time, another analyst whose name I don't remember came out with an analysis of the above ground available silver to soak up the deficit, and he said it's going to be gone in 2 years. So it could well be that we're running a bigger deficit than we thought, and the silver inventories available to cover that deficit are less available than we thought at the same time, and that brings the the crisis in the silver market, where one of the big exchanges defaults and just pays cash instead of silver, and everybody realizes it's all gone and the price goes straight up. That was kind of out there somewhere in the indefinite future. So now maybe it's in the intermediate term future now, where we actually can put a time frame on it, that in the next few years, the dynamic in the silver market changes in a really dangerous way for people who use silver, and an exciting way for people who are stacking it right now. So who knows? But it's nice to see those numbers coming out. Oh, and one other thing that just came out that's favorable for silver is India just announced that their silver imports in the most recent February were up like 260% year over year. So that means that it's possible that demand for silver from the Asian markets, which are big buyers of silver normally, is actually higher than is being built into today's models. So put it all together, and the silver story is really exciting. So here again, I don't think you want to just mortgage the house and buy silver, but I do think that a good dollar cost averaging program that gets you a certain amount of silver or a certain amount of dollar value of silver each month is probably a good thing to have now if you haven't already started one.
Now, one of the interesting things when we do start to see a bull market in precious metals, typically people go for gold first, and then silver starts to outperform because it's a cheaper alternative there. What I find interesting is the narrative has been, well, gold's really making new highs and silver has yet to catch up. But if you do look at the gold silver ratio chart over the last couple of weeks, it's fallen substantially. And if you look at from the beginning of the year, the gold silver ratio is actually down. So since the beginning of the year, silver has now outperformed gold. What do you think that signals for where we are in the bull market?
I think that's a normal stage of a precious metals bull market. When it just gets started, people buy gold because that's the big name, and that's the asset they associate most with inflation hedge and safe haven asset concepts. Once gold reaches the point where, like you said, the gold-silver ratio is historically wide, then people tend to start, they look at the price of a Krugerrand and think, wow, $2,200 for just this one little coin. And then they look at how much silver they can get for that amount of money. And it's quite a bit. There's a nice big pile of silver coins you can put on your table for the price of one Krugerrand or one gold eagle. And people start doing that instead. They start buying silver because it's cheap. And it's a very illiquid market in the best of times. So when that new demand comes in, it starts pushing up the price at a rate that's higher than whatever gold is doing. And you get the gold-silver ratio shrinking and silver outperforming gold and the silver miners outperforming the gold miners. And we're kind of in that part of the process now, based on what we've seen this year. Now, the thing is that it doesn't just end with today's kind of action. It usually ends with a parabolic move where gold spikes, but silver dwarfs the percentage gain in gold. That happened in 1979 to 1981, give or take. And it happened in 2009 to 2011 or so. So if we see that kind of action again in gold and silver, then silver is going above $100 an ounce from where it is right now. So I expect that to happen. It could be derailed by all kinds of crazy other things going on in the world, but just based on fundamentals, I think that's the kind of thing we'll see in the next few years, and it'll be, a lot of fun and a lot of validation for the people who have been waiting for this past decade for something like this to happen.
Now, we've talked about geopolitical risks. You mentioned a lot of other things going on in the world. I did want to discuss some of the economic risks we're seeing right now. You have mentioned the banking system. We've talked about that in previous episodes. You've also mentioned, I believe, on Carrie Lutz's Financial Survival Network, you mentioned immigration and how we're letting a lot of people in through the southern border, and there is the possibility of terrorist attacks due to that, and that could impact the economy. What are some of your top risks you're seeing currently for the U.S. economy?
Well, the border chaos is actually a pretty big one, and it might be an explanation for why we're not in a recession already. Because a lot of other indicators were pointing towards, interest rates were up and consumers were tapped out. It looked like a classic setup for a recession early in 2024. Didn't happen. And part of the reason for that is that we're letting literally millions of people across the border and just handing them debit cards with like $10,000 on the debit card. And they're spending that money. And that's stimulative. That's the government running a deficit and then handing that money to people who are going to spend it right away. So that's part probably of why the economy isn't in a recession yet. But that's not good fiscal policy, just as a general rule, letting millions of undocumented people in and then giving them money to spend. And that's what we're doing, and it's causing chaos. So on the one hand, you've got cities that used to think of themselves as sanctuary cities, now finding out what the true cost of unfettered illegal immigration is, because all those people are being shipped up to them. And on the other hand, you've got political chaos, where people who normally vote Democrat in our big cities are finding out that there's a cost to having those people, the people who are leaving the border wide open, in charge now. So you've got political chaos and you've got strange economic things happening because of the border. But just in general, you've got very bad governance in the U.S. right now. And that is, as you mentioned, that's before any kind of terrorist stuff happens, because we don't know who we're letting in. So there's no reason to think that some of them aren't sleeper cells that are being sent over here by people who want to do us harm, and that they're going to be hatching plans pretty soon, maybe timed with the election, or maybe timed with something else, or maybe not timed with anything at all, just random, that cause a lot of trouble. And, we have a lot of soft targets here where there are crowds of people in different places. And we've also got a lot of semi-automatic weapons floating around in the country. So you wouldn't have any trouble if you're a Taliban sleeper cell, let's say, and they want to kill a lot of people. They'll have no trouble getting guns. They'll have no trouble finding big crowds of people. So something like that could easily happen, that in terms of death would be on a scale of 9/11 or something like that. And we're creating the conditions for that by letting a bunch of unvetted people into the country. So yeah, that's another thing. And what do we do with something like that? It won't be like there's a country that attacked us or anything. But I think it'll have a huge impact on elections when the guys who let those people in get blamed for the things those people do, So it's a very scary time and a very hard to predict time for American politics, because we're making these gigantic mistakes that haven't yet come back to bite us, but easily could in the near future.
And when it comes to the election, I assume then you're thinking maybe if these events do happen, the other side will win. But it doesn't seem like, it's interesting because this election is unique in that it's probably nobody alive today has seen two people who have held the presidential office before running against each other, and they have the option there, right? But we've seen in both administrations how the issues with the deficit have not gotten any better, right? And we've seen an expansion of the money supply under both candidates. So do you see, regardless of who gets in, even if it's, the other party, that there will be any difference when it comes to the financial situation in the U.S.?
Well, I think we've got basically institutionalized deficits now, where there's nobody in charge who's going to be able to cut spending on a scale that that lowers the deficit to a manageable level. That's just not possible anymore. That time was maybe the late 1990s. That's the last time we had a chance to really bring things back into balance. And since then, it's autopilot. And it's possible that different foreign policy from one government to another would lead to maybe less military spending in the moment or something like that. But I think the big problem now is interest costs. We're at the point now where we have so much debt and we've had to raise interest rates because of the resulting inflation to a point where the interest cost of basically any big debtor, but especially governments now, is becoming unmanageable. The U.S., we're going to be paying $1.5 trillion just in interest in the coming year. Or in other words, in 2025, not this year. This year we're at $1 trillion. Next year it'll be $1.5 trillion, and that's a crisis level deficit just in and of itself. That's something that you might run in a great financial crisis kind of problem. If it was 2008, 2009 again, and the banks were collapsing, then you might run a deficit of that level, but nothing like that is happening right now. And we're still running that kind of a deficit, and it's still rising. So we're in a kind of a death spiral now where interest costs drive up deficits, and those deficits have to be borrowed, which raises interest costs, which increase deficits again, and so on, in just a feedback loop that can't be fixed without a gigantic crash. And that's where we are. So I have my opinions about who should be president going forward, and I think it's possible that there are policies that are better than the ones we've got right now, but I don't think that we can fix the financial situation in any politically palatable way. So I think that's going to go on regardless, and the end point is some kind of a gigantic crisis, and with interest rates going parabolic, I think that crisis isn't that far out, because how much longer can we have interest costs rising by $500 billion a year with no end in sight? At some point, that blows up the financial system, and we are on that track, and I don't see any way off of it.
It is interesting to see the trends that we see nationally, right? When it comes to the deficit, the national debt, right? That doesn't change with respect to who's president. Another thing that we've seen under, it seems like all administrations, right, is the consolidation of large companies. For example, during COVID, right, when we saw everything get shut down except for these big box stores. And then also with the banking crisis, we've seen JP Morgan take over First Republic Bank. And if we continue to see a crisis in the banking system, it's very possible, and you've mentioned that these large, too big to fail banks could start taking over these local and regional banks. And if you want to discuss that and kind of the consolidation of companies in general that we've been seeing.
Yeah, inflation leads to consolidation because the biggest entities in a society during inflation are able to borrow more cheaply than anybody else. And so they also usually have pricing power. So they can raise their prices to keep up with inflation. So that makes them relatively strong. And then in every crisis, the weaker players aren't able to continue, and they get bought out by the bigger guys who get even bigger, and therefore blah, blah, blah. With the big banks right now, especially, they've got an implicit government guarantee because they're considered to be too big to fail. So instead of government saying, well, if you're too big to fail, you're too big to exist, we need to break you up, they say, well, if you're too big to fail, we'll bail you out. And so that lowers the borrowing cost of JP Morgan Chase or Goldman Sachs because they've got an implicit government backstop, and allows them to use that cheap money to roll up entire industries. We've got Wall Street rolling up the housing industry right now. And they're looking at other kinds of healthcare that they haven't yet rolled up. And it just goes on because they can use super cheap money in order to take over entities that don't have the the access to super cheap money that the big guys do. So with what's coming, there's a banking crisis obviously on the horizon, and the most obvious mechanism for it is that commercial real estate starts to tank, which it is tanking now. And a lot of that is on the balance sheets of local and regional banks. They're going to be burned by that. They're going to lose depositors, which will force them to sell some of those depreciated assets at big losses, and so on until they start to implode. The government will step in with a bailout, but they'll do it in concert with JP Morgan Chase and Citigroup et al. And the big will get even bigger. So we could end up with just like 10 banks in the country after the next crisis. And that means that those 10 banks basically own the government, and that means that government financial policy will be geared towards the welfare of the big banks, which is to say artificially low interest rates, artificially easy money, minimal regulation of any kind, and the big guys will just get bigger and bigger. Of course, at some point it all blows up, so this won't go on until there's just one bank or anything like that. It's at some point, probably before we get to 10 banks, the system will just implode. And then we'll have that currency reset that we've also been talking about for all these years. So all of this stuff, the way the Jim Rickards and Rick Rules of the world have been predicting, are finally coming true. And the Peter Schiffs, these guys have been saying this stuff for a really long time. But at long last, a lot of it is starting to happen pretty much the way they called it, So I think the next couple of years it's going to be vindication for the stackers, and it's also going to be vindication for the people that have been called perma-bears unjustly, I think.
And I guess one way to stand up against this, right, this consolidation of industries, especially the banking system, is to hold something of real value in your hand, right? So you're not participating in the big banking system. But it seems like there is a bit of a conflict, right? Because, or maybe an internal conflict of, I don't want my bank to go under, right? So I just hold my funds in a too big to fail bank. What is your perspective on how people should navigate that question for themselves? And obviously, maybe there's not one right answer, but it seems like do we participate in the too big to fail institutions so that we're more secure, or do we somehow kind of say no to that?
Yeah, see, that's the kind of deal with the devil that we're being presented with, right? If you're worried about your local bank, then one solution is to just move that money to an account with Chase or something like that. And but do you want to do that? Do you want to be part of some big gigantic entity that is one of the reasons that the world is falling apart? And I would say no. That's probably not the best thing to do. A better thing to do would be to minimize the amount of cash that you hold in banks right now. Because remember, there's also the great taking thing out there too, where they'll do bank bail-ins instead of bank bailouts. And they'll take depositors' money and use that money to shore up banks that get into trouble. So you don't want a whole lot of exposure to that regardless. So, how much money do you need in your bank account? Don't have a lot more than that at any given time. And then the money that you have in hand after you pull some out of your bank, put it in real things like gold and silver coins. If we're talking bigger numbers, then really, really well-chosen real estate, which is to say not a Miami condo or something like that, but a relatively small town rental house or something that is seeing pretty good demand and that ought to hold up going forward, or that you can use in any event. You can stash your family in there if the brother-in-law loses his job or whatever. Do things like that. Or buy a little piece of farmland and then start, producing 1/4 of your food. There are things you can do with cash that is just kind of sitting in a bank account that's much more useful in terms of quality of life. So think about things like that, and or accelerate your prepping otherwise. Do you need an extra gun? Cash, use your cash for that. And what about storing the food that you're storing, things like that. So there are lots of prepping related things that you could be doing if you haven't already. And the extra money in your bank account could go towards that and dramatically improve your life.
Well, John Rubino, if our viewers are interested in learning more about prepping, about the financial system, you cover a whole large range of topics on your website, rubino.substack.com. People can find a link in the description of this video. Can you tell us a bit about what they'll find there?
Sure. It's a Substack newsletter that covers the stuff we talked about today, and the focus is on actionable advice. In other words, strange times are coming, but what specifically should we be doing about it? And so far, so good. It's a 1-year-old newsletter that has attracted a pretty cool audience. I'm having fun being part of it.
Fantastic. Well, thank you so much for your time, and God bless.
Thanks, Elijah. See ya.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 8th through April 15th, 2024, while supplies last. First, we feature 1-ounce 2024 American Silver Eagles at just $5.50 over spot. It's a limited supply, so there's a maximum of 1,500 ounces per order. Next, 1/10-ounce 2024 American Gold Eagles at just $51 over melt. It's also a limited supply, so a maximum of 150 per order. And finally, 90% constitutional silver pre-1965 mixed dimes and quarters at just $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.